This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Job hunt. Wall Street turns its gaze toward tomorrow's monthly employment report. We'll tell you what the markets expect and why. Handing over the keys, Ford names the new man behind the wheel as CEO Alan Mulally plans to step down in July. What's the road ahead for the automaker? And student loan crush, how the government is hoping to deal with the mountain of debt that already tops $1 trillion. All that and more tonight on Nightly Business Report for Thursday, the 1st of May. Good evening, everyone, and welcome. I'm Tyler Matheson. Susie Guerin is on assignment. Well, you know, it has been 5 years since the official end of the Great Recession, and even though the economy, the stock market, and the housing market have made tremendous gains, more than 10 million Americans who want to work are still without a job. Today, there were no records set on Wall Street, as a lot of investors seem to be in a holding pattern, awaiting tomorrow's April jobs report, arguably the most important metric on the health of the U.S. economy. Hampton Pearson with more now on what may be in Friday's non-farm payroll numbers and why some economists are more cautious than others.
Optimism for a Friday jobs report above 200,000 in April comes on the heels of mixed economic data in the last 2 days. The most positive trend, private employers hiring more than 220,000 workers last month, according to payroll processor ADP. There was also an upward revision in the March data to 209,000, the first back-to-back monthly gains above 200,000 in 18 months, a possible source of momentum for the markets in May.
I think we're setting up again for another run. Now, that might not be the last call for the year, but I do think the rest of this week's reports could be the start, or maybe it's going to take another month. But I think we're going to find out momentum is pretty good here in the second quarter.
But weekly unemployment claims rose unexpectedly last week to the highest level since late February. Mixed news for an economy that appears to be gaining momentum, and a reason leading economists are cautious about what Friday's jobs report will tell us.
It looks to me like the economy is continuing to heal, that we're shaking off the effects of the bad weather we had over the winter. We're getting some mixed signals, but I think the direction is continuing to point towards expansion of the economy, and I suspect we'll see solid job growth.
Consensus forecasts call for a slight drop in the unemployment rate last month. For that trend to continue, we'll need job growth at or above 250,000 per month in the days and weeks ahead. For Nightly Business Report, I'm Hampton Pearson in Washington.
Stocks edged mostly lower today, but not by much after a mixed round of earnings and economic data, including that spike in new jobless claims we mentioned a moment ago. But after wicked weather held shopping in check during January and February, consumer spending surged in March, highest rate in 4.5 years. Also, personal incomes rose 0.5% that same month, and manufacturing was higher in April for the third month in a row. And at the end of an up and down trading session, the Dow fell 22 points. The Nasdaq was up nearly 13. And the S&P 500 sort of split in the difference, lower by just a fraction. Two of the nation's biggest oil companies reported earnings today, and both topped analyst estimates. But profits at ExxonMobil declined last quarter due to rising costs for refining and a drop in production. That sent shares down 1% today. Different story at ConocoPhillips, where net income rose on higher prices for oil and natural gas and a boost in production, even at operations in Libya. Shares were higher by 1% today. Telecom giant AT&T has reportedly approached the satellite TV provider DirecTV about combining forces in a deal that could really shake up how you watch television. Shares of AT&T were a fraction lower, but DirecTV shares shot up 4%. Morgan Brennan has more now on the proposed deal and how it could change the entire pay TV landscape.
While neither AT&T nor DirecTV is publicly commenting on the merger possibility, such a deal could dramatically alter the pay TV landscape, creating a formidable rival to Comcast if its $45 billion purchase of Time Warner Cable wins regulatory approval. Experts say the pay TV industry is already on the cusp of major changes, and this deal would only help accelerate that transformation.
Well, I think you are seeing competition from every single product segment in cable, meaning video, broadband, telephony, which will probably force a lot of these companies, the incumbents, to consolidate.
DirecTV is the second largest pay TV operator in the U.S., second only to Comcast. DirecTV and AT&T together would claim nearly 27 million customers, compared to the 30 million a combined Comcast and Time Warner would service. Such a deal would also enable AT&T to expand its reach in pay television, where its footprint remains relatively small. And it already has partnerships in place with DirecTV in certain markets. For its part, DirecTV would access more internet services, where cable TV competitors have an edge. DirecTV has been a hot company for M&A speculation, also reportedly approached just recently by Dish Network, its biggest satellite TV competitor.
Well, I think Comcast Time Warner Cable has set forth a wave of consolidation in pay TV. And I think if AT&T acquires DirecTV, probably Dish is the next one to go.
Still, one thing's for certain, analysts expect to see more deal-making in this space, and consumers can expect to see more changes in their pay TV options as companies attempt to consolidate. For Nightly Business Report, I'm Morgan Brennan in Los Angeles.
Comcast, as mentioned in Morgan's story, is the parent company of CNBC, and CNBC produces this program. Another big telecom has a lot to brag about today. T-Mobile, the nation's #4 wireless carrier, added a record number of new customers in the first quarter. Thanks to aggressive marketing and discounting, the company added 2.4 million new subscribers in just the first 3 months of the year, more than its top 3 rivals combined. Even though the company lost $151 million last quarter because of all those discounts. Shares of T-Mobile surged 8% today. April was a huge month for auto sales, putting the industry on track for more than 16 million units sold this year. That's way ahead of last year's pace. After all that brutal winter weather, dealers saw strong sales of pickups and Jeeps and small SUVs last month. For Detroit's Big Three, the big winner was Chrysler, which had its best April ever, seeing overall sales rise 14%. Sales at its Jeep division up a stunning 52%. Despite recalling millions of cars last month, sales at General Motors still rose 7%, but sales at Ford were down a fraction. On Wall Street, stocks mirrored those figures, with GM shares ending a little bit higher and Ford just a bit lower. Well, despite that slight sell-off, Ford Motors made some big headlines today, announcing who will take over for CEO Alan Mulally when he steps down exactly 2 months from today. Phil LeBeau has the story on what lies ahead for Ford.
A big day in the auto industry as the Ford Motor Company announced the succession plans for CEO Alan Mulally, who will be stepping down on July 1st. He'll be replaced by COO Mark Fields at a town hall meeting today at the company's headquarters in Dearborn, Michigan. Fields says he has no plans to alter Ford's business plan in the near future.
Our One Ford plan has served us so well over the years, and it is going to continue to serve us well.
Fields has served as COO, running the day-to-day operations at Ford since late in 2012. But why did Ford finally decide that he was the person who should replace Mulally? Chairman Bill Ford says it was all about finding the right candidate both inside and outside of Ford.
I got to make sure that we are scouring the globe for the best talent. But, you know, I really kept coming back internally, as did Alan, to Mark, because we thought he was a great candidate. He's grown tremendously as an executive. And as I said, really importantly, he's part of the culture of Ford that I think is so positive.
As for outgoing Ford CEO Alan Mulally, he says he is focused on his final 2 months at Ford. And beyond that, he's not indicating any plans in terms of working for another company or taking another position in corporate America. But make no mistake, Alan Mulally will be in demand.
I haven't decided what I'm going to do next because my most important priority has been this orderly transition. But I really look forward to the future, and I look forward to serving. But I like that, you know, that retirement thing sounds a little bit good too. So,
Alan Mulally's legacy at Ford, the stock price appreciated 92% over the last 8 years. And when you look at how the financials did for Ford in his first 2 years, between 2006 and 2008, Ford lost $30 billion as he was right-sizing the company and dealing with an auto industry that was imploding. Since 2008, Ford has made $42 billion. Phil LeBeau, Nightly Business Report, Hartford, Connecticut.
So will that momentum continue? Will Ford continue to shine? Our next guest thinks so, and he has an outperform on the stock. He's Emmanuel Rosner, U.S. Autos analyst for CLSA Americas. Emmanuel, welcome. Good to have you with us. Mr. Mullally stepping aside, a charismatic executive, always seemingly very positive. What will the cultural change be like inside of Ford? Will it be big, small, what?
So Mullally certainly has accomplished a tremendous lot well at Ford, but we think that Mark Fields will very much continue in his path. He was the lieutenant of Mullally, and he was in charge of, in particular, of implementing the One Ford plan, which is exactly what has gotten Ford where it is. So we think that the culture and also the business plan, everything is likely to stay in the continuity of Mullally's accomplishments.
Very briefly, he mentioned One Ford plan. You just did. What is it?
So One Ford plan is essentially making better cars, but it's also cars that are the same, based on a small amount of platforms and sold across the world on that particular platform. So it improves the quality, it reduces the cost, and more generally improves their profitability in a pretty major way.
At Ford, they used to say, what is our job one? It was quality. What is job one for Mark Fields? What's going to be his biggest challenge on July 1st?
So the biggest challenge for Ford, but also its biggest opportunity this year, is essentially the launch of the F-150 pickup at the end of this year. This accounts for half of the North American profits. It's been the best-selling vehicle in the U.S. For the past 32 years. And essentially, Mark Fields has to make sure that this is done right from an execution point of view. This will be a revolutionary pickup, mostly because it's the first one made entirely of aluminum. And when we did analysis on it, we think it will knock the socks off the competition on almost every performance metric. So a hugely important vehicle for Ford, hugely important for profitability. And his job one should be making sure, take his time, make sure that this launch is executed in a flawless manner.
Is your very favorable rating on the stock largely tied to what you anticipate the profits will be coming out of this new Ford F-150? Is that going to be a real profit driver? And I assume you assume it will be.
Correct. So what we tell investors at this point is essentially this year is likely to be a bumpy ride because there's significant amount of things on Ford's plate from an execution point of view, tremendous amount of investments for the future, both in the U.S. with the F-150 pickup, but also in China, a lot of new plants opening. In Europe, they have to close a plant. There's a lot on Ford's plate. But the point is, we think that these will pay a very handsome dividend starting next year. And so we tell investors it's going to be a bumpy road this year. Earnings may get impacted, the stock may get impacted, but use any potential weakness to accumulate for the long term. We think that it will be a major profit driver.
Very quickly, can Lincoln be turned around, saved?
I think it's going to be challenging. The product is significantly better. The branding takes a tremendous amount of time to turn around. So I think it may be more geared towards exports and China in particular rather than the U.S.
Very interesting. Emmanuel Rosner, thank you very much.
Thanks for having me.
Emmanuel's with you. You're very welcome. CLSA America. Still ahead, the cloud. It's been a big buzzword on Wall Street, but what is it? And why are cracks starting to form in some cloud company stocks while others see nothing but silver linings? Could Coca-Cola do an about-face on its controversial but shareholder-approved executive pay plan because of pressure from Warren Buffett? The Wall Street Journal says the company is considering now amending the generous plan after Buffett called it, quote, excessive and refused to vote on it. This comes after a barrage of criticism from David Winters of Wintergreen Advisors, a major Coke shareholder. Buffett's Berkshire Hathaway is the beverage giant's biggest share owner, with about 9%. Wintergreen is now questioning whether Buffett's concerns about the compensation plan were even relayed to Coke's board. And a programming note, Susie Garib is on Buffett's home turf right now in Omaha, Nebraska, and she will talk with David Winters on tomorrow's program and with Warren Buffett on Monday's broadcast. Well, eBay has settled a federal antitrust lawsuit with the Justice Department over an agreement with Intuit not to poach each other's employees. There's no fine involved, just an agreement barring the internet retail giant from colluding with any other companies on new deals over recruiting or hiring away workers. In a separate agreement with California's Attorney General, eBay will pay nearly $4 million to help compensate potential victims in the state. The outlook for a lot of companies investing in cloud computing has suddenly become a bit cloudy itself, especially after the hotly anticipated initial public stock offering for the cloud storage startup Box has now been delayed. Dominic Chu has more now on the forecast for some of the companies doing business in cloud.
Cloud computing. It's one of the latest hot topics for investors all over the world. These days, companies are running more of their businesses over virtual networks with remote computers, servers, and storage. Basically, if you watch streaming movies or TV shows over Netflix, you're using the cloud. Or if you're preparing your taxes online with H&R Block or TurboTax, you're using the cloud. As you can imagine, a host of different companies are involved in the infrastructure for cloud computing. Big names like EMC, or Citrix, or even Rackspace. Or they have large divisions that are working on the next generation of connected computing. Big names like, say, an IBM or an Amazon.com. Over the last year, a number of smaller companies in the industry have gone public and had tremendous gains. But they've fallen on some harder times in 2014 as investors have moved away from the buzz and sizzle of these types of stocks. Cloud companies like Marketo, Benefit Focus, and Rally Software are all down big year to date. Meanwhile, bigger name companies with cloud exposure are up, like IBM, Microsoft, and HP. Some experts think that's a trend that will continue.
It's going to get a lot tougher for the smaller guys to be competitive in the cloud because there's a big infrastructure. There's a lot of money that's spent to build this cloud. And so ultimately, it's a big advantage to the larger companies that are service providers to the cloud.
That's not to say that smaller companies won't do well. After all, if they're that good at what they do, some bigger company may just buy them out and provide a nice payday for investors. But bets are being placed on the success of the best companies in the business.
The two big winners are going to be Google and Amazon. Google is coming up with more cloud services like G Drive, and Amazon has their Amazon Web Services, which basically powers a lot of companies' IT.
There isn't a lot of debate about how important connected or cloud computing will be in the future, but investors are taking different paths on how to profit from it. For Nightly Business Report, I'm Dominic Chu.
Good news in Microsoft's fight against hackers exploiting a flaw in its signature web browser. The company announcing it patched up a security hole in its Internet Explorer browser, which is often a default engine for much of the web and is used by millions of people around the globe every day. The patch even works for older versions of the browser that came with Windows XP, the operating system that Microsoft says it'll no longer service. MasterCard's first quarter profit rose thanks to an increase in consumer spending, and that's where we begin tonight's market focus. Overall results at the world's second largest credit card company topped expectations. Separately, MasterCard warned that Russian President Vladimir Putin's plan to create a domestic card payment system would create complications for its operations in the country. Despite that, shares rose a fraction to $74.22. And soggy cereal sales continue to weigh on Kellogg. The food giant posted a bigger than expected fall in quarterly revenue as its breakfast division sales fell more than 5%. Cost cutting helped the company beat earnings estimates, however. But investors did focus on the weak sales number, and the stock fell more than 2% to $65.37. Avon will pay $135 million to settle a probe into whether it paid bribes in China and other countries to gain favors. The cosmetics company also reported first quarter earnings that missed estimates. Sales dropped in every region as more of the company's sales representatives up and left. Shares plunged 10% to $13.72, making Avon the biggest decliner in the S&P 500 today. LinkedIn posted an earnings and revenue beat after the closing bell. The social network for professionals saw its revenue from its recruiting business increase by 50% from last year. But its full-year revenue guidance was a little bit below the consensus views, and that sent the stock down initially in after-hours trading. Shares were up more than 5% in the regular session to a big $161.22. There are reports that Pfizer may up its offer for Britain's AstraZeneca to more than $106 billion and raise the cash portion of the deal. Earlier this week, we told you that Pfizer approached its British rival twice about a takeover, only to be rebuffed. Shares of Pfizer fell on the news, down a fraction to $31.15. AstraZeneca popped Well, would you expect it? 2.5% to 81.09. And Cigna's first quarter profit surged on higher revenues from its group disability and life insurance businesses. Earnings topped estimates easily, but revenue came in slightly short of expectations. The insurer also upped its outlook, but the CEO says he's still being cautious.
We had a strong first quarter that enables us to increase our full-year outlook. Our full-year outlook increase is driven by two items. One, a bit of share buyback. Two, the underlying strength of the first quarter results. And finally, as we discussed with analysts this morning, we're still keeping some conservative view in terms of what the rate of medical cost growth may be later in the year.
Shares jumped 2.5% to $82.05. Coming up, how much of a drag is student loan debt having on the economy, and what is the Treasury Department doing about it? A brand new stock began trading on the NASDAQ today. Navient, the nation's leading student loan management, servicing, and asset recovery company. It was created when Sallie Mae split in two with the namesake company focusing on consumer banking, and Navient servicing $300 billion in college loans to about 12 million customers. Well, the Treasury Department is taking a closer look at the student loan situation and how it impacts the cost of college and affects borrowers, taxpayers, and economic growth. Sharon Epperson here now with more on what the Treasury Department is thinking and doing.
Well, Tyler, student loan debt in this country has grown to over $1.2 trillion, and nearly 90% of all student loans are federal loans. The government is now growing increasingly concerned that student debt may threaten to choke off U.S. economic growth as loan payments force households to delay home and auto purchases, saving for retirement, and limit other forms of borrowing, investment, and spending. Sarah Bloom Raskin, the new Deputy U.S. Treasury Secretary, talked to me about why the Treasury is examining these issues.
The student loan debt issues have a lot of connections to the economy, and anything that's of interest to the economy is of interest to the Treasury Department. So we want to take a very careful look at the amount of student debt that's accumulating and try to understand with some granularity and specificity what it's due to and whether or not it's dangerous.
Are you already seeing dangerous consequences of student loan debt?
Well, the first thing to think about when you think about student debt is that it's really an investment. It's an investment in people's potential. So we want to make sure that that is something that is a possibility for people, that it's a viable possibility, and that when people take advantage of it, they're being given the flexibility in terms of repayment and in terms of interest rates and being able to afford it.
One of the things that has also come up in the research from the Congressional Budget Office is the amount of money that has been made on student loans, $41 billion last year. And that begs the question from many critics as to why the government is making money on these loans when the affordability still for many is not there, and that there's the potential of default down the road and tremendous debt.
One thing we want to make sure we do right is that we give students and their families the opportunity to compare so that they can compare different educational options and compare schools and compare levels of debt and do standardized comparisons across schools, across colleges, so that students are well informed before they go into a debt situation.
Raskin admits that the Treasury Department does not have all of the answers, but she's on a mission to make sure they ask the right questions. She says if we can understand the patterns that lead to delinquency and default, we may be able to predict and even preempt such outcomes to the benefit of borrowers, taxpayers, and economic growth. Tyler.
Sharon, how can the government prevent people from taking on debt they can't afford to repay?
Well, one of the things that she says is that it needs to be a concerted effort of colleges and universities, of the government, as well as the loan servicers, and that they need to provide tools, whether that's going to the website like the Department of Education's website, to their college scorecard, and seeing exactly how much debt you may take out and what type of job you may have down the road. Will that make sense for you to take out that much of a loan?
So if people who shouldn't be taking on so much debt do, and ultimately get into trouble? What is the ripple through to the economy?
The ripple effect is what they're very concerned about, because if you have debt and you're paying it over a 20-year period or more, that is on your credit report. That can impact not only your ability to buy a home or your car loan, but even the job that you might get if your credit is impacted. So they're looking at those issues very carefully.
Are these loans, a lot of them, bundled together and securitized and then resold the way home mortgages were?
Well, one of the things that they're looking at is how people are taking out these loans and whether they're taking out the federal direct loans, whether they're adding to those loans with private loans, and what they can control. And 90% of the loans are federal loans, but there are a lot of private loans out there. That's hurting a lot of people as well.
Interest rates on those loans, there's always been a kerfuffle about when the rates were going to go up or not.
Right. Well, July 1st, they always revisit it, and we are expecting that we're going to see a lot of the studies show rates will go up.
All right, Sharon Epperson,
right.
Thanks very much.
Sure.
Interesting story and a big one for this country.
One we're going to continue to follow, too.
Big stuff.
And
All
on
right.
the website as well.
We're going to refer to people to the website right now to read Sharon's whole interview with the new Deputy U.S. Treasury Secretary about the student loan debt dilemma. Head to our website, nbr.com. And that will do it for Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks for watching. Have a great evening, everybody. We'll hope to see you back here tomorrow night. I'm Tyler Mathisen with a Nightly Business Report news brief. Stocks edged mostly lower, but not by much after a mixed round of earnings and data, one day ahead of April's big jobs report. The Dow fell 22 points. The Nasdaq was up nearly 13 and the S&P lower by just a fraction. New jobless claims spiked higher last week and planned layoffs rose higher in April, but consumer spending surged last month while personal incomes edged up and U.S. manufacturing rose. April was a huge month for auto sales, with the industry on track now for 16 million units sold this year. Chrysler, best April ever, with sales up 14%. General Motors sales rose 7%. Ford's, though, down just a bit. But Ford announced that company insider Mark Fields will replace Alan Mulally as CEO on July 1. And tune in to Nightly Business Report here on your public television station.